Good afternoon. My name is Rositsa Chopeva. I'm a partner at the corporate finance xFigure, and I have the pleasure to moderate this panel. And before we proceed, let me first thank the organizer of this event for putting Bulgaria and Southeastern Europe for a third year in a row on the renewable energy map. Frankly, for me, it's amazing to see the interest in the conference, to see the insights from industry-leading speakers, as well as the networking opportunities of this event. And up to now, we have been covering the issues related to the legislation, related to technology selection, EPC, and of course, the central topic for the PPA. But one of the main drivers that frankly dictates the growth and development of the renewable energy sector is financing, the availability and eligible structures for realization of the projects. From this perspective, I believe we are privileged to have so diverse participants in the panel. We have representatives from European Investment Bank, from European Bank from Reconstruction and Development, investor perspective from Resolve, ProCredit Bank, and risk insurance and coverage from the renewable energy insurance broker. Before we proceed with the discussion on sustainable financing, let me give a minute to each of the participants to make an introduction. Please, Matej.
Thank you very much. So I'm Matej. I come from Prague, Czech Republic. I represent British fund Actis. So we are a global infrastructure investor, and in our energy fund number 5, we allocated $1 billion to spend for European projects. We as Resolve Energy, which is a company based on basis of EnerCap fund. So for those of you which are active in the region, you know, we've been building wind and solar since 2010, and we built more than half a gigawatt of wind and solar, usually being the pioneers. So our fund decided to find projects in the whole Europe, trying to build the projects which are ready to be built with the grid permits and construct and operate these projects. I'm very happy and honored to be here. Thank you very much.
Yeah, thank you, Rositsa. It's a pleasure to be here. My name is Patrick Zeitinger. I'm from Germany. Came in here for this event since Monday. I'm a supervisory board member of ProCredit Bank Bulgaria, and used to work at the holding, our head office in Frankfurt. They're responsible for credit risk and developing also our approach to financing renewable energy. ProCredit is a development-oriented commercial banking group, which is a specific focus on SME finance and also on green finance. We've just recently reached our goal of having 20% of our loan portfolio allocated to green financing, out of which a significant share is also in renewable energy. So I'm happy to be here today and to discuss with you about the financing, and also curious to hear the opinions from my colleagues today.
Thank you, Patrick. Mr. Pislenski.
Thank you, Rositsa. My name is Svetlin Pislenski. I'm an associate director within EBRD, the office in Sofia. I cover mostly energy sector projects here in Bulgaria. I have more than 10 years of experience with the bank, so I have quite a lot of historical insight on behalf of EBRD, and I would be happy to share that with the audience. I would like to thank the organizers for inviting me again for this year's conference resource. And I'm also looking forward to discussing some of the important topics that we touched upon already in the previous panels. Thank you.
Thank you. Mr. Georgiev.
Thank you. A pleasure to be here. I represent Renewable Energy Insurance Broker. We are a dedicated insurance provider, service provider, that we've been serving the renewable energy industry internationally, I would say, 4 different continents for the past 10 plus years. We are very focused and specialized on commercial, industrial, utility scale renewable energy projects where we help and support clients in terms of financial funds, financial investor funds, investors, EPC companies, O&M companies, and equipment manufacturers and suppliers. Our main role is to have insurance dedicated programs. They were like tailor-made and focused on particular industry, so we can help mitigate the risk and provide additional level of guarantees and securities in the long term.
Thank you, Mr. Georgiev. Mr. Ivanov?
Hello, everyone. Happy to be here. My name is Atanas Ivanov, and I am responsible for the public sector lending of the European Investment Bank in Bulgaria. Maybe a few words of the EIB. There are two important points which I wanted to share. First of all, it's the largest, by far, international financial institution in the world. And this is important because we can deliver scale in investments on a large scale quickly. Especially in the renewable energy sector, to have a good balance sheet for financing, it's really important. And the second point is that we are not just an international financial institution, we are also a European institution. We are much like the European Commission, the European Parliament, the European Court of Justice. We were created as the European financing arm with the treaties of the functioning of the European Union. So our shareholders are exclusively the European member states, and this makes us very targeted towards delivering investments and facilitating investments that contribute to the European goals. And this, I think, will be important when later on we discuss on how we engage with the EIB to prepare a project. So, thank you. Looking forward to the discussion.
Thank you very much, Mr. Ivanov. Let me open a discussion with a question to Mr. Pislenski, considering the extensive more than 10 years experience with financing energy in EBRD. Can you please share your vision on the current state of the renewable financing market? And something that is important, apart from financing pure greenfield projects, how can EBRD support the development of the sector in Bulgaria and including of different technologies?
Okay, I would start with the state of play of the renewable financing sector in Bulgaria from our point of view. As we've heard already during the previous panels, there is quite a substantial level of investor appetite. At the same time, we have motivated authorities and there is intention and certain plans for the government to support further integration of renewables. The banking sector is also interested to finance green projects and specifically renewable projects. So we are in a situation where there's a lot of the elements of parts of the equation are present. Of course, we heard about some of the obstacles for more renewables to be connected and to be financed. Some of those we see ourselves connected with basically permitting process, delays with interconnection, but also to an extent the level of demand from basically with regards to PPA, corporate PPAs, is perhaps not as high as investors and financiers expect it to be based on experience in other countries, including some nearby countries, neighboring countries of Bulgaria. So to the extent that these obstacles could gradually be resolved, and I believe that there are plans both to resolve the sort of technical obstacles and with the help of, for example, further investments, strengthening the grid, transmission, distribution grids, which are supported by EU funding, for example, under the Resilience and Recovery Plan, under the Modernization Fund. Some of those obstacles could be removed. And then also we expect to see growing demand for PPAs, both from corporate users as well as utilities and traders, etc. So hopefully with the gradual resolution of those issues, we will see also more and more financing for the renewable projects, and we as EBRD would be very happy to participate and finance some of those projects. And then to the second question about what else EBRD is doing, of course, our primary focus as a financing institution is to provide funding for greenfield projects, and we see our role being, supporting the development of the sector predominantly through financing. However, we are also involved in extensive policy dialogue and technical cooperation, trying to help the government and various stakeholders to create a better environment for to promote basically further investment in the sector. And as an example, I would mention the technical cooperation that EBRD recently signed with the Ministry of Energy related to upcoming support under the Recovery and Resilience Plan of Bulgaria in the context of storage solutions. And this goes in two directions. One is grid level storage, the so-called Restore project, part of the Bulgarian RRP. And the second axis is the concerning co-located storage projects, which will be combining greenfield renewables projects plus co-located storage. So actually, I wouldn't spend too much time on that. We're just starting now the actual work on these two projects. We have put together a very competent team of both internal resources and a consortium of external consultants, international experienced consultants, that would work and support the government in preparing for those two projects. And of course, to the extent that these projects lead to the creation of storage solutions and implementation of storage capacity in Bulgaria, be it grid level or co-located, this will facilitate the introduction of additional renewable capacity, which is our goal ultimately.
Thank you very much, Svetlin. It's really important to have the financial and lenders' view on resolving different issues in the sector, not just the capital one. And in this respect, I would like to ask Mr. Ivanov for his perspective on the way that European Investment Bank supports the sector, and also probably for some of our audience, it would be important to understand how should the project be structured in a way that it is eligible for financing from EIBA.
Thank you. Thank you for the question. Well, I mean, the European Investment Bank has become the EU climate bank as in the past couple of years. Maybe you've seen this trend, and we have promised and dedicate our financing over this decade to support 1 trillion of investments that are in support of climate and fighting climate change. And renewable energy generation is one of the tools that we can actually achieve that. So we deliver about 10 billion per year in investments that are supporting the fight against climate change in renewable energy plus energy efficiency, and of course supporting of the grids, the transmission and the distribution networks is the key to achieve that. We have also committed ourselves under the Repower initiative of the European Commission to deliver 6 billion on top of roughly 10 to 15 billion of euros that we deliver in this space over the next 5 years. So quite dedicated to the sector, and therefore we're looking forward to talking to promoters and to see how we can help accelerate the investments. As far as what makes a bankable investment and what makes an eligible investment for the EIB in this sector, I would say, I mean, as I mentioned initially, we are a policy bank, and therefore it's much more important to us when we talk to the promoters to understand the impact their project will have on the society as a whole, on environment, on climate, on socioeconomic considerations, on top of the purely financial, let's say, results of the project. Of course, they're important. So when we look at a project, we want to see a very well thought through project by the project promoter who have backed it up with a solid business plan where they address the majority of the risks that are associated with such projects. And of course, I mean, as a bank, we want to make sure that the project has enough cash flows to sustain the repayment of the debt. But also there are other factors which are important, I mean, not only on the revenue side, but also on the cost side, on the estimation of the cost, on the delivery. If the project promoter has enough experience, we want to know to what extent they have delivered such projects in the past, are they capable to replicate those? The regulatory and the policy environment is essential, and I would say that we've seen over the past several years in different countries, especially, for example, Poland, it's amazing how they have refocused their activity from coal to actually delivering renewable energy projects. And we have, I mean, offshore wind, for example, we have done 1.2 gigawatt of offshore wind in the Baltic Sea with Poland, which a couple of years ago was unthinkable. And this is, again, a measure of how a regulatory environment which has been supportive, and in their case, they developed the contract for differences mechanism to support the cash flow, so basically assure us as a lender that there will be sufficient to cover our financing. So these are important factors, important risks. Of course, as Svetlin mentioned, also on the permitting and connections to the grids, I mean, some markets, there are delays 3 to 5 years on average, and this is something that, of course, you know, plays a role in how we look at a project and how realistic is a project to be connected to the grid. In Greece, we've seen quite a few, let's say, initiatives by the government to make this project easier and to do this on a massive scale, especially when it comes to environmental impact assessments or clearing the project from various agencies. They're really committed to do this. And unfortunately, our region, I mean, Bulgaria in particular, we are not that much involved in the market, and there are, let's say, various reasons to do so, but we will very much welcome regulatory and policy changes in this perspective. And I think the other major part is also, the grid. I mean, our grid is not ready to basically take on these investments. I mean, as far as I remember, when talking to the transmission operator, they were saying about 40 gigawatts of new renewable energy, you know, or, basically requests. This is not viable. This cannot happen. But even as far as I know, this year they're expecting to connect to the grid about 700 megawatts. I mean, this is new capacity that's coming on, and the grid is not really ready for this. And the other major thing, at least from European perspective, is to be able to have this interconnected between the member states. So, you know, energy created in the south to be able to be delivered to users, to off-takers in the north, and vice versa. When the winds are strong, then we can deliver it here. This is not there yet, and this is one of the major things that the EIB wants to support, and we've been investing a lot of the grids improvements, of the interconnectedness between the countries. So we will continue to do that, but we want a holistic view when somebody comes to us with a project and they want to get our support. They really need to be able to address all these risks and to at least show us how they intend to mitigate those. And we're happy to take it from there. Of course, we have a lot of technical assistance, a lot of internal expertise, as well as external on different aspects, technological and all of these things. But at the end of the day, it comes down to commitment and to really doing your homework to address all these risks, and we are there to support them.
Thank you very much, Mr. Ivanov. It's very important for the developers and for the investors in renewable energy to understand how to structure their projects to mitigate the risks, to show sustainability of the cash flows. In order to be eligible for financing. And I thank you also for sharing your regional and international experience, and I encourage all the the other participants to do so, because of the present participants are not operating only in Bulgaria, so we can take the best practices and apply them in our region. And while up to now we have been talking about utility scale large infrastructure projects, I would like to draw the attention to support for the business for their transition to green energy. And ProCredit Bank, from this perspective, has been specialized in supporting small and medium enterprises in South and Eastern Europe. Mr. Zeitinger, can you please tell us how the transition and how the investments in renewable energy work for manufacturing, agricultural, and clients from the active business that you have?
Of course, thank you for the question. So maybe to start with the fact that we are a banking group based in Germany. So we have a good knowledge of the German market. We've seen its development. We've observed it over many years. We've even participated in Germany with some project financing through our local subsidiary bank. And our focus is very much in Southeastern and Eastern Europe. And we have been kind of impatiently waiting for the markets finally to pick up and to start. And observing also the levelized cost of electricity development, it was kind of just a question of time until these markets will eventually pick up. So we kind of prepared the credit technology. We had it in our pocket and we were waiting for this finally to pick up. Unfortunately, it took longer than we expected, and we were kind of having an individualized approach here and there for different countries, given that the market conditions were also different. The longest experience we actually have in energy efficiency investments. So similarly, as you mentioned also, energy efficiency is really a keystone of this whole climate finance area. So we have more than 15 years of experience in energy efficiency, working with SMEs, also with EBRD credit lines from back 2006. There were even some grants in this context, very I think, efficient financial products which were really having a positive impact, working with SMEs to reduce their environmental impact and have cost savings in the meantime. And now the renewable energy technology becomes more and more cost attractive, I would say. And the question is, how do our SME clients relate and work with this technology? So today we talked a lot about utility scale project, but actually when we look at PV specifically, distributed PV makes up an increasingly growing share of the total PV deployment, maybe even making up in the future to 50% of the total PV capacity increases. So this is really a large area, especially in households and industry. And here many of these investments are rather small scale, up to 1 megawatt typically for self-consumption. And this kind of financing is not project finance, it's more balance sheet financing or PI financing. And we are specialized, as I said, also in SME finance. We work with a lot of industrial companies, agricultural companies that do also have quite some electricity consumption that can benefit directly from investing into their own renewable energy capacity. Here in Bulgaria, there was an interesting program we kind of delivered up to 30 kilowatt, which is also corresponding to the incentives in the local market. And we've had similar products also in our other banks in the region. And these have been actually taken up quite well, specifically since the increase of the electricity price. So we've been kind of trying to convince people from our clients, also from environmental perspective, that this makes sense, but often you know how it is, the return on investment has to be attractive, and with rising prices of electricity and falling cost of technology, we have now reached this point where actually almost all of our clients would have here a real interest, financial interest, to invest into renewable energy. The advantages are clear. These clients are more resilient to electricity price shocks. They have typically here a simple, fast deployable, long-living technology, which increases their margin and, as I said, also increases their resilience. From a bank perspective, once you understood the investment profile, it's not so much assessment. Actually, we have the internal capacities to assess it quite quickly, I would say. We do not need external assessments as you would do in project finance. So it can be scaled up quite quickly. We have a high diversification of the portfolio, and we actually see a pretty low cost of risk in this context. So for us, also quite low cost of financing. Obviously, it takes time to build volume in this context. So in Bulgaria now we've recently issued more than 700 loans, building 23 million of portfolio. It's not so much, but when you think from an impact perspective, actually, you have convinced all these businesses that renewable energy can be effective for their own business model, and also these people somehow become a bit of an ambassador for renewable energy technologies, and might also talk to their colleagues. You have kind of a creation of an ecosystem also of companies that are providing these services, and this market is then starting to develop. Obviously here the self-consumption is just one element of our renewable energy strategy. SMEs are also interested to invest into small-scale, utility-scale projects, and this is also what we are willing to finance. Here we typically have SPV structures in order to separate the risks, so ring-fence the risk in SPV. You would have an assessment based on the project cash flow, so project finance assessment, but you would still want to have some kind of a recourse from the SME just to have a stronger financing position and to be able to leverage also further, reducing the cost of finance and as a consequence also the levelized costs. And here in this area, I think it's also very important to provide incentives for smaller scale utility projects, because in this context here again, we have usually faster deployment, less costs of, less risk of construction in this context. Usually the time between investment decision and deployment is rather short in this context. And what you can have several projects which are somehow interconnected through cross guarantees, creating a better risk environment for banks to finance such projects as compared to large scale 100 megawatt projects that come with a huge bulk risk in the beginning, and then afterwards, once it's working, it's less risky, definitely. We would definitely prefer to have smaller projects that would be financed step by step and then connected to each other in this context. From a bank perspective, I think renewable energy still has a very high potential for further development. On a group level, we have devised our credit technology in this context, and we're willing to scale up, obviously, our financing in this area. However, the market environment is defining in this context, so the Bulgarian market, I have to say, has not been too attractive yet, given also the lack of feed-in tariffs in this context. We have been very active in Greece, so actually we've built a portfolio of above 200 million in project finance, small-scale project finance with our Bulgarian bank in the Greek market, where actually we do benefit from small-scale utility projects to have feed-in premium or feed-in tariffs, which does reduce the risk for the bank and allows also for long-term financing above 10 years with a low interest rate.
Yes, thank you. Thank you for this perspective. Can you very briefly share your experience with a structure that is not so much present on the local market, and it includes the energy communities, but I think you have a very good experience in Germany and in the other countries that you operate. How does this work from lender's point of view?
Yes, so energy communities or energy cooperatives is something which really goes back more than 100 years in Europe. Basically generally the cooperative system in Germany also has actually a high presence in the financial system. Even in Europe, like 20% of the financial assets are in financial cooperatives in Europe. So it's something that is known in Western Europe specifically, not so much known here in Bulgaria. I think there's still no regulation, even though the EU is definitely pushing to have energy cooperatives as well as a mechanism. We have good experience with this kind of structure, legal structure in Greece. Here they have a specific beneficial feed-in tariff, which is slightly higher than the typical feed-in tariff in order to kind of incentivize the local population to invest into renewable energy in their own region. I think here, specifically when you look from an ESG perspective, there are many benefits. ESG in the energy sector is really high. I mean, we have risks, environmental risks. I mean, obviously all the external effects of the fossil fuel industry, nuclear also. We have many oligopolized markets typically here. We have kind of intransparent markets. We have also corrupt-prone situations where large corporates intervene with governments. And the transformation to a renewable energy based energy production system comes with many opportunities. And I think in this context, the energy cooperative actually allows for kind of a democratization of the renewable energy production. So in Germany, actually, it used to be that all the energy production was kind of owned by the big four companies. It was a highly oligopolized market, if you want. And if you look at today, what is the share of ownership of these four in the RE capacity? Is less than 10%. The rest is owned by private individuals, by farmers, by institutional investors, by project developers. And we have really kind of a diversified structure of companies that are investing to renewable energy that are directly benefiting also from this, also local companies. And in the case of energy communities, we have really the local population investing into electricity for profit that will be consumed by them later on. From an impact perspective, that is very interesting. And from a banking perspective, often they are rather risk averse. it is kind of difficult to bring everybody together, so you want to have some form of a kind of a social strata that brings them together, so some kind of agricultural unions or others. Actually worked in Greece with agricultural unions that kind of already have a kind of a coordination. They come together, they bring in a form of crowdfunding, basically equity together, and then they are able to develop these projects, usually step by step, one after the other, in a long-term way, which allows for bank financing to be quite applicable.
Thank you. That's a very interesting structure, and we really hope to have the legislative framework and also the willingness to apply it in Bulgaria. Now I want to move the discussion from lender's perspective to investor and developer's perspective, and I really thank the organizer of the event for bringing these versatile and different views. Matej, can you please share how the process with the lenders work from your perspective as a developer and investor in renewable energy?
Thank you. So we'll try to be brief. I think the infrastructure investors which are building renewable assets, they must rely on lenders, on the financing. And I think it's good that Europe now is experiencing already 30 years of cooperation when there are people which can build, there are people which can lend, and if there are projects available, then in the end you will end up building the project together. So in the old era, you were building the projects together with banks and the governments. So in the end, the investors came because the governments paid them to build a wind or solar. I think that era is long gone, even though some governments are still announcing there will be CFD schemes, but myself personally, I strongly believe it's more for the small-scale projects, households, to help small industrials. And I think we are now in the new era that the market understands there is no more cheap energy. I mean, we no longer have access to natural gas from Qatar at 8 euros per megawatt hour. We are no longer in 2020. Also, personally, I believe there is no way that we can get rid of nuclear in the next 5 years. I think otherwise our grids will collapse, be it Romania or Bulgaria or Central Europe. So I think what is a great lessons learned from the past is that banks can work together with developers, with local traders and utilities, and the TSO, because in the end, myself being close to a dispatch center in the distant past, I have a big respect for any TSO in any country. I think we all try to blame the TSO, saying he's a bad guy, he doesn't let you connect. But just imagine being in their shoes. I mean, alone in Romania and Bulgaria, every year, the small-scale solar is adding hundreds of megawatts, and nobody's asking the TSO if they can manage. With Bulgaria, with the destroyed hydro pump storage, which is for years, and you know, for a TSO, it's difficult to maintain the stability of the grid. They have their buffers, they can still connect, they even probably can connect more than 4.2 gigawatts in Romania, and I don't know how much in Bulgaria, but the buffer is getting smaller, and if the governments and the market will push them to connect more installations, which will be the case, I think, in Bulgaria next year, and Romania, we will have curtailments. So this is what we as Actis, as a global infrastructure investor, we see it in the other continents. So if you push too much the grid, they will start curtailing you. So I think Bulgaria is not a long way from the moment that on Saturdays and Sundays and noon, photovoltaics will be simply curtailed. Same for Romania, you see the Czech Republic, in Poland. I think this is simply an experience which I can bring from South America. It's standard. We should really get used to it, because I think that for a society, it's more important that the household and small industrials are bringing their own solar and energy efficiency projects, because it's better for the whole, say, economy, than to connect, let's say, one big project, like we have a 1 gigawatt in Romania, single one, or 200 megawatt in Bulgaria, and to block the whole grid. So that's why our approach is to select projects which are ready to be built with the grid permits, and just we apply our skills to build it. So to answer your question, we are very happy that the bankers were there and the bankers are there to help us, to build.
Thank you, Matej. Can we move the focus to the PPA, the central topic of this event? And we will later address the question from the previous panel, but as you have extensive experience with developing projects and securing PPAs, and as we see delays in the recent year with completion of the projects or with grid connection of the projects, Can you please share how you solve that risk and how this risk is transferred between the developer, the off-taker, and the lender?
Thank you. So, yeah, I mean, the delay risk or the risk of not constructing as planned is one of the three key questions all the buyers, all the corporate buyers are asking us, be it in Germany or the pan-European buyers which have sites in Romania or Bulgaria or Central Europe, because in the end, if you want to build a big project, you can't rely on Bulgarian and Romanian industrials. You need to go to the headquarters. Usually, I mean, we learned hard lessons. We spoke so many times with local teams which wanted to sign it, but if the headquarters in Germany didn't like the PPA, then you ended up nowhere. That's why we included our efforts to spoke to pan-European industrials for telecoms, automotive, materials. The three questions they're asking us is that how sure are you that you are going to build on time? You know, if you say as your COD, your starting day is January 25, it's already suspicious, you know, because if you say January 25, it would be really a big coincidence that, you know, it's a beginning of the calendar year. The second question they would ask, how strong are you at meeting our ESG targets, being really conscious about how your project affects the community? And we are really happy for this question because I think there are different market segments, and when it comes to long-term PPAs for pan-European buyers, they really would like to sign only high-quality projects, so the ESG is really important. And the third question is, what is the sharing of risk that we want to propose? And the biggest one is how to share the delay risk. So I think it depends from the buyer to buyer. Mostly it depends on their advisors. So I think those of you which try to build a project with a corporate PPA, you know that first you need to convince the buyer, and then an advisor comes from the buyer side, and then they tell them, this is too expensive, you are facing too many risks, go and renegotiate, and you suddenly end up with almost signed a PPA when you end up not having it. And I think just from experience, it's good that Romania and Bulgaria is now following the example of Poland and Central Europe. So it's typical to have a grace period of 6 months where you can be delayed and then you don't face penalties. But after that, if you are delayed one more day, you are fully repaying any losses that you incurred to the buyer. So it's a mark-to-market evaluation. If they needed to pay 300 euros for missing power, you are going to pay for it. And that's why I'm very happy that there are now also the insurance products that can help to mitigate and to solve the problem.
Thank you. I'm just taking one word from what you shared, and it's the requirements of corporate buyers for ESG. How does this work from PPA perspective? It will, of course, be reflected in a higher price for the project, and thus this higher price is translated into a higher PPA price and accepted from the corporate buyers.
Thank you very much. So we are still surprised when some of the local industrials in Central Europe, not typically Southeastern, but Central, they are not asking about the ESG. When we ask them if they have an ESG policy, their answer is no. But for all the other buyers, they started a negotiation with an NDA, their code of conduct and their ESG policy. So you know that we are dealing with advanced buyers, and we are really happy that most of buyers have this. So I think that the market is now pushing away small projects when they really try to make it as cheap as possible. And the pan-European industrials, they really are after the ESGs. Surprisingly enough, it's not really more expensive to be ESG conscious. It just takes much more efforts. And I think what summarizes that if you want to build a good project for banks and for buyers, you can't take any shortcuts. And I was really happy when I heard some of the bankers saying that if you breach the ESG when you build a project, you even can end up with a project which is not green anymore. So if you really breach the ESG, so you bought something you shouldn't have, you end up with your bank saying, I gave you a good, let's say, interest rate, provided you are a green asset, but you are no longer a green asset. We need to open the financing contract. And I think this helps the whole Europe, so that if the renewable investors are being more and more conscious about the ESG, it helps everybody.
Thanks. Thank you, Matej. Let me a little bit change the angle of the discussion again to the risk mitigation and to the question of insurance. That is, of course, lies as a central topic both for lending, for the investors, for PPA selection. And I would like to ask Mr. Peter Georgiev, renewable energy insurance broker, specializes in ensuring renewables assets in all over the world, not only in Europe. Can you please share how insurance of RES projects is different from insuring of other assets? What are the specifics and what are the risks associated with these type of investments?
Sure, thank you for your question. As our primary work is to support and secure renewable energy projects across the world, it's a process that we also associate with data-driven information. And this has been a practice, and this is how projects has been evaluated during very large times and periods of times. And I'm not speaking just frankly for our region, but this is based on each and every geographical location. So based on that, yes, you can see, and we've experienced very large and catastrophic events. If we're speaking natural catastrophes for the past years, depending on where and how, but this is the core and the essential problem where we see the most damage and where we see the most cases of loss and insurance events. Now, if we move a little bit towards our region, where we focus on Central and Eastern Europe, those events, those exposures are a little bit more limited. I would say to thunderstorm, to lightning, to severe storms or very strong winds, where they're accountable for more than average 65% of loss and insurance claims in the region. So in this regard and this aspect, each and every project, I would say like it's case by case, but PV projects, wind projects, they do have their specific terms and conditions. So yes, it's very essential. It's a core evaluation process and assessment to be able to say like what are the risks and which different phase or on which phase you enter to negotiate with either client. So yes, we would like to start on very early stage, so we have the ability to oversee the entire process, to see what are the insurance requirements on each and every project, because in many cases, and based on our experience, there are also municipalities, there are local counties, there are, I'm saying again, based on each and every case, but the requirements are quite frankly very heavy on some projects, and you need some lead time to be able to sophisticate certain, I would say, just non-binding indication. It doesn't have to be a quotation. So the rate in our services we propose are oriented and always like strictly focused or narrowed down to the activities of the very active companies in the space, which are, let's say, large full EPC companies, and they're quite often subsidiaries or they're smaller size companies that are helping to support them on a regional level, subcontractors, where we see from recently that required, instead of bank guarantees as a standard process, now we see more and more requests for surety bonds in the region, which is not, so traditional to our place. We've seen that across the ocean in the United States, where it's a standard practice, standard process, and this is how technically the investor is able to evaluate certain EPC company. If they're willing to provide and to secure 100% surety guarantee for the performance of the actual project, which, yes, it's 100% indemnification. Here is about 10 to 15, which is relatively smaller, and I would say, yes, you can find easier access, or you can find solutions. But this is an easy way to be able to evaluate certain company activities. So from this perspective and our I would say experience on international projects, I would love to bring this more in terms of methods and mechanisms, and to apply those in criteria, or how we go from starting point to be able to approve certain projects, and they're becoming more bankable, which our products, which we tailor-made and we designed specifically for the industry, help a lot.
Thank you. I'm sure that every project will receive very aggressive and good structure for financing if we have 100% guarantee from the EPC. Very briefly, because you mentioned that you're also providing a product that is related to guaranteeing the performance of the asset, how can this product support structuring of the PPA? And what does it mean actually to guarantee the performance of the asset?
Correct. If we're speaking particularly in this tailor-made product, is what we call the reduced yield cover, or solar shortfall, or underperformance guarantee. It is designed to provide additional level of guarantee for the production and for the performance of the system. It is based on the annual production, and we take P50 prediction based on PVCist or PVCist analysis, and we guarantee 90% of the P50. So yes, there is a 10% which are so-called deductible on the investor side, but the difference that is falling on annual base is compensated by the insurer. So this is a very common product, I would say, in different areas, different countries, and a mechanism that is used by lenders. It's used by large corporate, in financial institutions, in order to mitigate risk, to make the project more bankable, or to be more cost effective, and to enhance the creditworthiness of the project. So yes, we offer this, and this solution is used mostly on mid to large scale solar projects, in combined with the traditional operational low risk, business interruption, general liability for the project. So this, I would say, combined bundle would certainly make the project a lot more bankable.
True, because it is related to sharing of the risks and mitigating of the risks.
Correct. And for, I would say, corporate PPAs, that is a very hot topic in this particular panel. The way we see that, the way we would like to be more and more implemented into our environment here is the possibility that every investor or producer could use that as additional guarantee, just as a peace of mind that this will compensate them in case of a penalty that they will receive from the buyer, from the off-taker, if they're having a missing gap and the volume of electricity that they have to deliver on an annual basis is not met.
Thank you. Let me take the challenge from the previous panel and address the question to the participants to see the lenders and investors' point of view. Is short-term PPA a no-go for lenders, or still can there be a structure for financing with short-term PPAs? Maybe to start with Mr. Pislenski.
Thank you. I have to say that short-term PPAs they're definitely not a no-go for us. And in fact, we are considering even projects which are fully merchant. Of course, we have to take, a case-by-case approach and assess the expected cash flows, do the debt sizing based on the proportion between contracted and merchant revenues. And of course, the projects which have predominantly merchant revenues require higher upfront equity, and the leverage is lower. But for us, from the point of view of EBRD, we could definitely finance short-term PPAs. We have seen projects where there is a 3 or 4 year PPA upfront, and then we incorporate, as part of the structuring, for example, we incorporate an incentive for the investor to renew that PPA before its expiry. Otherwise, for example, a higher cash sweep component kicks in. So we know for sure that we allow higher amount of flexibility for the investor, but also it comes with additional incentive and additional peace of mind from the banker's point of view. So this is, in a nutshell, I can say that we can be very flexible, and to the extent that the risks, commercial, technical, and otherwise market risks are assessed properly and are understood and are shared fairly between the lender and the investor, we could tailor the structure around the specific circumstances of that project.
That's very promising to understand that we have support from the lenders, even with short-term PPAs. I don't know how much time still we have, but maybe a short comment from Mr. Ivanov. Is a short-term PPA a workable solution or a no-go?
Well, thank you. Just really briefly, I think it depends how you compensate. PPAs are a mechanism to ensure sustainability of revenue. So if you don't have that, if you only have it on a rolling basis, like having a fixed term, let's say, lending facility which reprices every 5 years, versus having a 20-year fixed contract that doesn't reprice, but you need to take into consideration other things when you do this thing. So I think again, it can be done. I think from our perspective, we prefer a long-term view because we usually lend long-term, 15, 20, 25 years. So if we, depending on how the project sponsor wants to structure this, and if they prefer to have this additional flexibility of repricing every 5 years, maybe it could be done. But I think we are, let's say, more in favor of other measures to secure the long-term predictability of cash flows and merchant risk in principle, depending on where it is. Because merchant risk in Bulgaria is one thing, merchant risk in a developing market is another thing. So I think it's case specific, but overall, I would say we need to take a look at the specific. It's not a no-go per se, but it's definitely something to be discussed with the promoter and see what exactly they want.
Okay, Matej, Patrick, some words on your vision on the topic with short-term versus long-term PPA.
Sure, yes. I mean, of course, we don't say it's a no-go. I mean, in the end, banks are flexible. We do our analysis, and the question is, does the cash flow suffice for repayment? If yes, it's a matter of structuring in the loan. Definitely, it will lead to lower leverage, higher cost of capital. I mean, this is just the consequences of having this downside risk kind of not being transferred to a third party. And it depends a lot on the bank's expectations for the long-term electricity prices. And usually they diverge quite a lot from the investor's perspective on long-term electricity prices. We sometimes have clients assume that the prices from this year will continue, and we say, no, the cost of generation are dropping every year. So we assume long-term the prices also to go towards 50, 60, maybe even below. And then the cash flow has to be sufficient with these expectations for this to qualify. But if it's sufficient, then yes, we can finance it and have other buffers. Also reserve accounts play a role in this context.
Okay, so we understand that the short-term PPA is reflected into the loan structure, probably into the leverage, the cash sweep and IRR. Matej, what is your vision? How this works from investors' perspective?
In the end, all the complicated structures for trading, financing, and so on, it's simple mathematics. So if you compare how much money can your banker give you if you have a 10-year deal, and if you have a 5-year deal, in the end, it will be probably just half. So that means that you need to provide much more equity. So for every investor, if you need to provide much more equity, you are building less projects. That's why European Union and our wind and solar associations in Brussels, they are fighting hard to encourage industrials to sign up for long-term PPAs. We are really surprised that for a German or Northwestern buyers, it's not really a problem to sign 15, 20, 25-year deals. And this is exactly what then can help bankers to give us a bigger loan so that you end up paying a standard equity rate of 30%. And you, with your $1 billion, you can build more renewables. And if that's what the European Union wants, I think that's probably the way. So the short-term PPAs, in our eyes, it's all right in the markets when you can't resell your power on a long-term basis, but it's you only build less gigawatts.
You're motivated by the structure to go long-term and secure the cash flow. I have a couple of other questions, but I would like to ask the audience and encourage you to ask your questions to our panelists.
Thank you. My name is Luca. I'm coming from the energy consultancy ICAS. We're talking about PPAs or CFDs, but I want to challenge the panelists about green debt financing. Why would Southeast Europe not take advantage of capital markets and issue green or sustainability-linked bonds? EBRD backed 50 million into a Greek utility PPC in 2021, 650 million SOB, which was an outstanding reception from investors. So my question is, would you consider investing in green bonds issued by either the country or state utilities with good credit ratings as one option of funding renewables and those countries and utilities working on their decarbonization strategies? Thank you.
Svetlin, maybe?
Well, thank you for the question, and it's a very good one. I personally would advocate for supporting and participating in green debt or green bonds and sustainability-linked bonds. We do that a lot in other countries. I would personally like to see that in Bulgaria as well, and I've seen, potential issuers, potential companies. From my point of view, at least, I think it would make sense, for example, for the Bulgarian Energy Holding, or for some corporate or international sponsors who are considering investing in a portfolio of projects across the region, and we would be very happy as EBRD to participate in that. I think it enhances significantly the financing structure for the project sponsor. It provides additional benefits from ESG point of view, and it is potentially translated into lower cost of the issue overall. So I would be very happy to support that if there are such opportunities in Bulgaria.
Yeah, from the perspective of the EIB, I could say, I mean, we are one of the first ones who started the green bond market almost 10 years ago. And we definitely like that. And we invest a lot in green bonds. We have a green bond desk, which is actually located in my department. So we encourage our project sponsors and our counterparts to essentially consider complementing loans with bonds depending on their needs. But of course, the green bond label is something that comes with strings attached, so to say. So you need to really ensure that you have the, let's say, the internal resources in order to comply with the requirements of having the green bond label. But it's worth the investment for sure, the efforts, and we do see this as a nice complement. Whether in Bulgaria this will happen someday, I really hope so, to be honest. We need to have some scale because usually with the green bond, I mean, it's about the credit rating, right? So how many corporates in Bulgaria have the credit rating that can support a good interest in bonds? But maybe with insurance or other mitigations, we can achieve something, but definitely is a complementary, we see it as a complementary product to our main, let's say, lending activities. So great question, thank you.
Thank you. Do we have another question? We have time for one more question.
Maybe I would add quickly to the question as well, because we have actually issued a green bond. And I think one of the problems is also it's quite difficult to issue a green bond. It takes quite a lot in administrative work. And then the reporting requirements also for green bonds are also significant. So as a financial institution, we have kind of the capacities, but even for us, it was kind of tedious. So I guess for local project developers or others, simply the workload which comes with issuing such a bond, and given also the lack of experience in the market, is indeed a barrier for these activities to happen. But I think facilitating such should be in the interest of IFIs as well.
Thank you.
We issued with IFC back then, for example, which was a very helpful institution in this context.
I have one more question. If there are no questions from the audience, and it is related to the rising interest rates that we see, that put pressure on the cash flows of the projects, on the size and debt capacity, of course, and on the returns. And I take the opportunity that we have both lenders and investors on this panel to see what are the requirements for mitigating the interest rate risks. Do you require securing or hedging or swap or different types of instruments in order to mitigate the rising interest rate risks? I don't know, Mr. Ivanov.
Well, rising interest rates are a reflection of the high inflation, right? So it's, I mean, for us, again, the certainty of cash flows, the electricity prices will also increase, and they have increased because the basis, the unit cost has increased, the price of raw materials, everything. So depending on how the revenues have been hedged, rising interest rates may not be a problem, so to speak, depending on whether the promoter has actually hedged the interest rate exposure. Because, for example, with us, we can deliver a fixed term, let's say, loan, which the rising interest rate wouldn't affect in any way. And this is where it comes again for the short term. If you have to reprice in a high interest rate environment, that's a problem. But if you have fixed this for the next 10, 15 years on a long-term PPA, you don't have this problem. So it's really a matter of how specifically you have addressed those risks in the beginning when you presented your project to lenders, but definitely interest rate as well as the FX rate, because sometimes like companies, they raise funds in zloty or crowns, Czech crowns. So this plays, let's say, it's a major factor in the analysis when we evaluate the project upfront. But it could be a problem, but it could also not be a problem depending on how you have done your homework from the beginning.
So it's tailor-made based on the structure of the project.
Exactly.
Is it the same with EBRD?
Well, we typically require a certain share of the project to incorporate an interest rate hedge, and I think this is the standard market practice. Yes, I guess it's more of an issue for investors and project sponsors, because they have to consider their ability to pass through the higher cost of interest to their end users through offtake agreements or otherwise. But from the banking point of view, you know, to the extent that the margin over the base rate is, you know, reflective of the level of risk, I think we do not have an issue. The issue is more for the investors.
For the investors. Maybe Matej, and then we'll proceed with Patrick to give his opinion on mitigating the risk. So from investors' perspective, how does this work? Securing with a hedge versus benefiting from the market?
So I will not comment specifically for us, but I think that for any prudent investor, you need to hedge your interest rates in a reasonable long-term horizon to protect the value. Thank you. So passing the floor.
The problem is that SME clients often have no experience in our markets with fixed interest rates, and they're also not too open to accept kind of a higher interest rate in order to fix it. So it is a bit of a convincing process that we have to do, and we are doing, and it depends also on the currency, as you said. So in euro we offer it, of course, we also hedge it then, not to keep the risk, but many of our clients are not necessarily willing to take it, so sometimes we even make this a requirement. And I think this is something which has to change in the market over time. The investors have to understand that keeping interest rate risk in an SPV that cannot react to it is unnecessary, and the bank is an effective way of actually hedging it. So it would be more efficient to pass on this risk through the bank and the hedge in this context.
Thank you very much. I think we have limited, and we have taken all the time available for this discussion. For me, it was a pleasure to have the discussion and to see that both lenders and investors share the same perspective for securing the risks, for working professionally on each stage of the project, and for being flexible in terms of financing options, but in terms of add-ons and looking holistically as the sector. Thank you very much.
Thank you.
Thank you.
Thank you.